Hello traders, today we want to talk about wave theory tips for currency traders. Wave theory tips for currency traders. The financial instrument that we are analyzing is the Canadian dollar, Japanese yen. I'm on a monthly chart and we're going to start counting Elliott wave. The first Elliott wave is this one. The second wave, this tiny one, followed by the third Elliott wave that has been extended, and the fourth Elliott wave right here, followed by the fifth Elliott wave. Feel free to disagree with my wave count, or feel free to compare your wave count with my wave count. All right, so I'm going to call out the first wave into green. All right, so if you have any comment or suggestion, put in the comment section. What I usually do, I read the comment. I may not reply directly to the comment, but what I do, I record another video to clarify the comment or the question. This is okay, the procedure that I follow here. All right, so do not think that George, you didn't reply to my comment. I read it and record another video, all right, to answer your questions. The second Elliott wave, I'll color it into red, and the third Elliott wave into orange, and the fourth wave into pink right here. Oops, no, hold on please traders. All right, so we have a multi-wave that is completed now. Okay, so I'll leave the fourth wave there, and then we have the fifth wave right there. Okay, so first wave, second wave, third wave, fourth wave, and the fifth Elliott wave. As a currency trader, one should also combine the currency trading with the Elliott wave principle in order to understand the price structure and also to interpret the language of the price. Where are we? Where are we going? What is likely to take place? Then we have, okay, a correction that has begun here. Is a flat correction that is starting here. But as you can see on this chart, you will see soon that that flat correction, okay, has failed. So price came down 1, 2, 3. All right, and again, it went up 1, 2, 3. Trying to form the flat correction. You can see how the price came down very fast here. This volatile bearish candle was the beginning of that C part of the flat correction, because you have to understand that the flat correction is an ABC chart pattern. But as you can see, the C part of the flat correction was not completed here. You will see that this is what we talk about, the reality of the Elliott wave trading. So you will learn the theory, and then you start applying the theory, and you will encounter sometimes some of the challenges that you are looking at here. A flat correction that was not completed. Very often, a lot of beginners, Elliott wave traders, will have a bit of problem when they reach this point, because they don't know exactly what is happening anymore. A pattern, when a pattern is starting, it does not mean that the pattern will definitely finish until it is finished. All right. Sometimes, because of the economy news, decisions that are made by the Federal Reserve, okay, all right, monetary policy will affect currency pair, and you may see sometimes a sudden change in the price structure, and you need to be aware of it. So when you are counting Elliott wave as an Elliott wave trader, you may Elliott wave Forex trader, you may understand what is happening here. Then we have again here. Now we have, okay, the flat correction. So you can see here, feel free to disagree. 1, 2, 3. All right, 1. Okay. So here it is. 1, 2, 3, and then again 1, 2, 3 right here. All right. So we were here expecting the C part of the flat correction, okay, to come down more, but it did not. I can see it came down few, but it stopped at the support here. The support at 92101. This support here 92101 is stopped there. But the flat correction continues, as you can see here. It finally went above the high of the fifth wave. Now we have what we call an expanded flat correction. What was taking place here first time was a classic flat correction that was forming, all right, and it couldn't go down very much. Something let me say that, George, this is a classic flat correction, 1, 2, 3, 1, 2, 3, and this move down is the C part, that's it. But normally it should go a little bit more down. But the flat correction continues, and now you see it here, the price went above the high of the fifth wave, forming what we call the expanded flat correction. All right, it's a bit messy. So you see many times the price coming down, 1, 2, 3, 1, 2, 3. C part has failed. So, all right, see the C part has failed. This is a complex, flat correction. All right, I don't want the video to be too long. Then we have this session here. So, all I will say at this point in time, you can see that this section here is a consolidation. I will try to color it now, and then it will become a little bit clearer to some traders that have a bit of doubt about what I'm saying here. All right, it's not easy to color this section here. Okay, move it away. I'll color it into orange, and then you'll see now my new flat correction. Okay, that has become a little bit complex. All right, so we don't want to make a mistake. So it came down 1, 2, 3, and then we have again 1, 2, 3. I want you to ignore this session. Consider this session as, okay, the complex part of the flat correction. So what I'm going to do, I'm going to cover it so that you may understand what is taking place. So we have another 1, 2, 3, but the C part has failed. We can say it's a distortion to a certain degree, but it's not a distortion as such. It's a complex flat correction. Then you can see here the price went up again. Up like this. So you may see it went up 1, 2, 3. Some trader may say, George, it went up like this, up to this point. And then it came down the tail of this candle. All right. And then it went up like this. Okay. But I don't want to draw that line, so I'll remove them. But we just want to go into the mind of other traders, what they may be thinking. All right. So how do we know this is an expanded flat correction? The verification that we do, we apply the Fibonacci extension to the fifth wave. And usually, the top of the expanded flat correction, the top of the expanded flat correction is here, this point here. The top of the expanded flat correction will correspond to the 138.2% Fibonacci extension level of the fifth wave. Where is the 138.2? You can see 138.2% on my chart. Let's zoom into it, my friend. The reality of area wave trading. Can you see 138.2% level? And we draw a line there. Boom. Now, there was a question that a trader asked about that, saying that you said that for the expanded flat correction, it will stop at 138.2% level. All right. So to reply to that trader, this is about the comment. This is the first resistance that we are watching. All right. Doesn't mean that the price will definitely go there or stop exactly there. The price can go above the 138.2% level. All right. So this is what we are talking about. So there is also a teaching in the Elliott wave. Okay. Sector, people are saying that you cannot have, all right, a triangle in a second Elliott wave. Now, over the year, as traders start applying the Elliott wave, there are many things that the Elliott wave practitioner has discovered. Things that the theory said that it cannot happen was happening. For instance, one example is that one cannot see a triangle in the second wave. Well, all I will say, at one point, you will see them. You will see, though the theory says that, oh, you cannot have a. What they are saying, in fact, is that the triangle, the horizontal triangle, very often will take place in the fourth Elliott wave, because the third Elliott wave is very often extended and the horizontal triangle are shallow. So when the third Elliott wave is extended, the fourth wave, very often we see triangles, horizontal triangle in the fourth wave. So normally, this is it, normally, in an orderly market, okay, the triangle will not appear in the second wave, but will appear in the fourth wave. But don't take it as an exact science, thinking that you will never see a triangle in the second wave. You will see it. There are times when the second wave is a triangle. Another reason why we don't see a triangle in the second wave is because, you see, the price was, so if you follow our guidelines, all right, you will see that we have first a bearish trend and then a consolidation, blah, blah, blah. And then we have a new cycle that is beginning. So the dominant force before the first wave was bearish. Okay, you see, so the dominant force was bearish, so there was a bearish trend that was finished. Now a new cycle is beginning. Then we see the first wave. Because the dominant force is bearish, all right, very often during the second wave is very often deeper. It can go up to 50%, 61.8%. Some Elliott wave traders think that it will come all the way to the beginning of the first wave. Yes, it do happen, but I don't teach that. I do not teach that. All right, I do not teach that. All right, all right, this is about myself. Okay, so because the dominant force is bearish, as the first Elliott wave springs out, a lot of bearish traders are still in the market. They want to sell. So that's why we see very often that the second wave will go a little bit deeper, even to 78% Fibonacci retracement level of the first wave, because the dominant force was bearish. There was a bearish trend before the first wave, and they are trying to sell, thinking that the bearish momentum will continue. Those market participants do not know anything about Elliott wave. That's why we do not see triangles. So it usually go down quite deep, the second wave. All right, they try to push it down at least to the 50% or 38.2%. And a triangle very often will appear in the fourth wave. But remember that the triangle very often appear in the fourth wave. And that's why they say that you will not see a triangle in the second wave, but you can. You can even quote me on that, all right? You can quote me on that. All right? So I answered two questions now, talking about, okay, a comment that a trader posted at 24 Elliott Wave YouTube channel. That's where I'm talking about Elliott Wave. But here at 24 Forex Trader, I'm talking about how one can use Elliott Wave with Forex trading, okay? So I need to mark here. Something for myself. Okay, all right. So I clarify those 2 points in this video now. So our flat correction 1, 2, 3, 4, 5 wave right here. You can see that the expanded flat correction has stopped at 138.2% Fibonacci extension level of the fifth wave. Doesn't mean that that's where exactly it should stop, but that's the key level that we are watching. All right. And in most cases, the expanded flat correction will stop at 138.2% level. That doesn't mean that that's exactly where it will stop all the time. The classic flat correction may not reach that point. And you may see sometimes a distortion. The price may go above the 138.2% level before turning around and coming down below it. So the move that went above the 138.2% before quickly coming back below it is a distortion to a certain degree. So this is a flat correction. 1, 2, 3, 4, 5. That's the multi-wave, followed by 1, 2, 3. That flat correction became complex because the C part was not completed. Some may say this is a classic flat correction. Good. we are all, okay, we are not violating the market pattern in all cases. And this is, okay, the B part of the flat correction. We couldn't see clearly the internal waves of this B part of the flat correction. Now we have, you can see again the same reaction. Let me remove this line. You see how the price came down very fast here at the end of the first B part of the flat correction. This is the first B part of the flat correction. 1, 2, 3. That's the first B part of the flat correction. This is the second B part of that complex flat correction. So as people were expecting the C part to continue, you see how the price went down fast. As we reach the 138.2% level, you see again the same reaction. Down to the same level. Can you see? Same reaction, same reaction, same reaction. Now, you have to understand that it looks to me that the small money didn't like to sell here. They did not want to sell it here. They want to sell it at 138.2% level. Looks to me they didn't like this reaction very much, or some economy news change the dynamics of the market. So this is, okay, a survival for this currency pair, the Canadian yen, and now we have now the B part, the real B part of the flat correction, followed by the C part. You see this first time the C part has failed, and the C part is subdivided into 5 manual way. So normally this is the first part of the supposed to be the C part correction that should continue, but has stopped here. But again, this is the first part, you see, so the C part is always subdivided into 5. Now, first, okay, that's the 1, 2, all right. Again, here, some trader may disagree with me, feel free. Oops, I'm moving line, all right, well, okay, I'll leave it there. Okay, 2, 1, 2, 3, 4, 5, that's it, all right. So, multi-wave, first wave, second wave, third wave, fourth wave, fifth wave. Very tiny wave. Some may say it's a part of a correction. I will not disagree because it looks like a bigger consolidation taking place here. But we can see 5 wave. That's what I'm saying. In the Forex market in the last 5 years, we see a bit of choppy market going on. So don't be surprised. It's a bit choppy here. So multi-wave completed right here, followed by the complex flat correction, and the C part of that complex flat correction is 1, 2, 3, 4, 5. Now we are expecting a possible reversal. So this is what we are saying. One step at a time. Okay, the Elliott wave curve is one step at a time. That means it will definitely go up now. The price still in a declining channel. As it's going up, the resistance that traders are watching is the edge of this channel. So personally, my expectation is that it will be nice. Okay, price does not have to do it. It will be nice for this currency pair to go up like this. All right, and then to pull back, either forming a higher low or equal low here before going up. The double bottom chart pattern will give us more confidence, okay, to buy this currency pair. So I will prefer, as it's going now, to go up. So this is my preference. Doesn't mean this is what will happen. It will be nice to have another market that this currency pair goes up a little bit up near the 8782 and then come down to 76330 or form a higher low on the edge of the trend line and then continue to go up. So that will be a double bottom with a higher low or a double bottom with equal low. All right, this is about wave theory tips for currency traders. So in all cases where we are now, all I can say to traders is this. I'm going to put a line there, which is very, very important for me. The priority to bullish signal above 7945. Okay, as the price going up, watch out for the edge of the red channel and also the level of 8782. And priority to bearish signal below 7945. If it's going down, be aware of the support at 7630. All right. This is the end of this tutorial. Okay, talking about wave theory tips for currency traders. The financial instrument that we were analyzing is the Canadian yen, the Canadian dollar, Japanese yen. We have in this case a multi-way that was completed in 2013, followed by a complex flat correction. That flat correction is now completed right here. All right. Personally, I would prefer the price to go up a bit and pull back from either higher low or from equal low before we'll be more confident to buy it. Price to bullish signal above 7945 up to the edge of the red channel, and watch out 8782. Prior to bearish signal below 7945, be aware of the support level at 7630. If one wants to trade around key levels, looking for trading setup, and then one should apply, very important, all right, a top-down trading method or a multiple time frame trading method without ignoring the economy news. If one is trading Forex, one should never trade Forex and ignore the economy news. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. Happy trading to you all, and speak to you soon. We are the TSTW24 traders, talking about wave theory tips for currency traders. Speak to you soon.